The IMF is concerned about surging Aussie house prices. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of Heise Said. Well, the International Monetary Fund is concerned about Aussie housing prices. Isn't that nice, everyone? Doesn't that give you the warm and fuzzies? Let's have a look at this press release from the IMF. So, the IMF Executive Board concludes their 2021 Article 4 consultation with Australia. Awesome. So, Australia's economy has weathered the pandemic comparatively well. Underpinned by sound macroeconomic fundamentals, large-scale fiscal and monetary policy support helped lift the economy out of its first recession in 3 decades in the wake of the initial COVID-19 waves in 2020. Economic activity recovered to well above pre-pandemic levels by the second quarter of 2021, faster than in most other advanced economies, with adverse distributional consequences remaining contained. New outbreaks related to the Delta variant since June 2021 have posed new challenges, with a sizable loss in economic activity in the third quarter of 2021, and some regions, sectors, and workers disproportionately affected. Now, you've got to understand, when there's calls for mass immigration in Australia for 2 million extra workers, and people are going, why would anyone want to come here? Look at everything that's been going on. It's a lot better than other parts of the world, guys. That's all it needs to do. We don't need to be the best. We just need to be comparatively better. And that will lure the people here. Australian banks have remained liquid and well capitalised, and households and corporate balance sheets proved resilient. Surging house prices have raised concerns around affordability. I mean, affordability, when has it not been a concern? And financial vulnerabilities, and the authorities have tightened macroprudential policy. Quickly rising vaccination rates offer a pathway to a new normal as the country gradually lifts restrictions and reopens its borders. Accommodative fiscal and monetary policies should soften the near-term economic impact and lay the foundation for post-lockdown recovery, with economic growth expected at 3.5% and 4.1% in 2021 and 2022, respectively. Temporary factors have pushed headline inflation to the top of the Reserve Bank of Australia's 2 to 3% target range. Underlying inflation has remained lower and should gradually rise towards the midpoint of the target range. Uncertainty around the economic outlook remains high, linked to the pandemic's trajectory. Renewed domestic outbreaks that would slow economic activity and delay the reopening constitute important downside risks to growth, as does COVID-19's impact on Australia's trading partners. By contrast, effective containment of the pandemic during the reopening could restore sentiment more quickly, with a faster recovery in household consumption and business investment. Other risks pertain to prolonged global supply chain disruptions, tighter global financial conditions, geopolitical tensions, a house price correction, and climate-related events. So pretty much anything could be a risk. They've kept all their bases open. So the Executive Board assessment. Executive directors agree that Australia's sound pre-crisis macroeconomic fundamentals and effective policy response helped cushion the pandemic's impact and have supported the recovery. Directors encouraged accommodative and agile macroeconomic policies in the near term, given the downside risks and uncertainties, complemented with structural reforms to boost productivity to lay the foundation for a sustainable, inclusive, and green recovery. It has to be a green recovery, everyone. Directors commended the strong fiscal support provided in the context of the pandemic and noted that Australia continues to have substantial fiscal space. They support further stimulus should downside risks materialise and stress the need to ensure adequate support to vulnerable workers and businesses, including through active labour market policies. They generally encouraged tax reforms to gain efficiencies, with a few directors highlighting the case for rebalancing the tax system away from direct taxes towards indirect taxes. Here's the question. Who are going to have more of an impact on the decisions of our behavior of our bureaucratic and political class? The directors of the IMF or the constituents who they're meant to represent? I'll have a shot of coffee. You let me know who you think will have more of an impact in the comments below. Directors agreed that accommodative monetary policy has been instrumental in supporting the economic recovery. They underscored that monetary policy should remain data-dependent and well communicated, with policy normalization calibrated to the strength of the recovery and expected inflation. If inflation pressures become more persistent, an earlier tightening may be warranted, while conversely, additional support can be deployed in case downside risks materialize. Now there you go. There's the I jokingly say mortgage keeper if there's a risk of a housing correction of any significance here in Australia. I don't know if it's a joke anymore. How much intervention have we seen? And we've got an election year coming up. Directors welcomed the authorities' commitment to continued reforms for enhancing financial sector resilience and including recently announced reforms to the bank capital framework and the financial market infrastructure. They encouraged further efforts in addressing rising financial risks from climate change and cyber attacks and underscored the importance of further strengthening the AML CFT regime. Notice how this all sounds very similar to what we've been hearing from the World Economic Forum. I mean, there'd be so much overlap from these organizations and people. And the thing is, it works its way into your bureaucratic class. Directors underscored that surging house prices and elevated household debt raised concerns about increasing financial vulnerabilities and welcomed the recent macroprudential measures to mitigate emerging risks. They emphasized the need to closely monitor lending standards and tighten macroprudential policy further if risks continue to build. Directors also noted heightened concerns of housing affordability and encouraged the authorities to implement supply-side reforms to help alleviate the issues. There you go. Supply-side reforms, more housing. So, well, I'm agreeing with the IMF here. Maybe they care about Aussie houses more than our own politicians. Come on, guys, listen to these guys. Learn something from them. So, directors welcomed the recently adopted target to reduce greenhouse gas emissions to net zero by 2050. I hope that doesn't include our exports. If it doesn't include our exports, okay, sure. But come on. If it includes our exports, it's going to be a nightmare to achieve. That means individual citizens here will have to be net negative. It's just crazy. And Australia's commitment to increase investment in developing and deploying low-emission technologies. They encourage fast progress towards the net zero goal with a comprehensive policy framework. In that context, a number of directors saw merit in a broad-based carbon price, another tax, as an effective policy option. Well, if we tax carbon, then that's going to be another cost on housing. Let's just go nuclear, ship it overseas, and then use that to offset. While a few others consider technology-based approaches more feasible within the range of possible measures. Directors encourage reform to reinvigorate productivity growth and support a sustainable and inclusive recovery. Efforts should continue to focus on advancing the deregulation agenda, supporting digitalization, enhancing innovation and competition. They expressed appreciation for the authorities' continued support for an open trade environment. So, well, let's have a bit of a talk about this one. So, some good things here, highlighting the supply side issues in housing in Australia, calls for tax reform, among other things. But really, how much influence is the IMF going to have on the political policies of our bureaucrats and our politicians? Shouldn't it become a democracy and the demand for our legislation be coming from bottom up, not from top down? What do you think, everyone? You tell me. Anyway, guys, thank you for watching this episode of Heise Says. Check out this. I've completely forgotten what one I was going to. Check out this video, a rant I did on Realpolitik about, well, the $500 million spent on food vouchers that are going to junk food. Just perfect. Check that one out, guys. A good old rant that got me angry. I'll see you next time.